Trump just watched $2 billion vanish overnight, not in a stock market crash, not in a bad business deal, in a coordinated legal strike so precise, so devastating that even his own financial advisors are reportedly telling him there's no way out. And this isn't speculation or political theater. This is Deutsche Bank, Ladder Capital, and three other major lenders simultaneously calling in loans, freezing credit lines, and demanding immediate repayment on debts that weren't due for years. When the institutions that propped up the Trump organization for decades suddenly pull the plug all at once, you know something catastrophic just detonated behind closed doors. Hit that subscribe button right now because you won't want to miss any of the videos I release. So what triggered this financial avalanche? A leaked internal memo from Deutsche Bank's Risk Management Committee dated January 22nd, 2025, reveals that the bank's exposure to Trump-related entities has been reclassified from acceptable risk to critical liability requiring immediate remediation. Sources who've reviewed the document say the decision came after forensic accountants discovered what they're calling material discrepancies between the asset valuations Trump provided to secure loans and the actual market values of those properties. We're not talking about minor accounting disagreements here. We're talking about properties valued at $500 million for loan applications that independent appraisers now say are worth barely $180 million. This isn't just another legal problem or civil lawsuit that drags on for years. This is Trump's entire financial empire facing a liquidity crisis so severe that insiders are using words like catastrophic and irreversible. And believe me, when banks that have stood by Trump through bankruptcies, scandals, and criminal investigations suddenly coordinate to demand immediate repayment, you know the walls are closing in. It's honestly hard to believe we're watching the same institutions that defended their Trump relationships for years now racing to cut every possible tie before they're left holding worthless collateral. Here's the full picture of what's been unfolding. Tensions between Trump and his lenders have been building since the New York civil fraud verdict in February 2024, when Judge Arthur Engoron ordered Trump to pay $454 million for fraudulent business practices. But everything changed according to financial filings from January 18th, when Deutsche Bank's Compliance Division flagged Trump Organization accounts for enhanced scrutiny under new regulations requiring banks to verify the actual value of collateral backing their commercial loans. The memo obtained by Reuters reportedly shows that Deutsche Bank conducted emergency asset revaluations on Trump properties, securing over $340 million in outstanding loans. What they found was shocking. Mar-a-Lago, valued at $739 million on loan documents, was assessed by the bank's own appraisers at just $75 million. Trump Tower commercial space, claiming $527 million in value. The bank's analysis showed realistic market value of $220 million. Doral Golf Resort in Miami, listed at $1.2 billion. Independent evaluations commissioned by the bank came back at $340 million. This wasn't about policy differences or political targeting. This was about the sudden realization that the collateral securing hundreds of millions in loans was worth a fraction of what Trump claimed, putting the banks themselves at enormous financial and legal risk. Smash that like button if this is making sense so far. Here's where it really gets serious. When Deutsche Bank's board reviewed these findings in an emergency session on January 20th, they recognized immediately that continuing to hold these loans exposed the bank to potential fraud liability and regulatory penalties that could dwarf the money Trump owes. And let's be honest for a moment. Banks don't suddenly demand immediate repayment from borrowers unless they believe the alternative is catastrophic. They don't accelerate loans years before maturity unless they think the borrower is about to default or the collateral is about to become worthless. They don't coordinate with other lenders to simultaneously call in debts unless they're trying to get out before a total collapse. Here's what multiple banking sources say happened next. On January 23rd, senior executives from Deutsche Bank, Ladder Capital, Capital One, and two smaller regional banks held a confidential conference call to discuss their collective Trump exposure. The group represented over $620 million in outstanding Trump loans. Sources told Bloomberg that Deutsche Bank's chief risk officer reportedly stated that the bank could no longer justify maintaining the loans given the asset valuation discrepancies and the mounting legal judgments against Trump entities. Meanwhile, Ladder Capital's general counsel warned that if Trump defaulted on their $100 million loan secured by Trump Tower, the bank would face years of litigation trying to seize and sell assets that might not cover what they're owed. By the end of that 90-minute call, the banks had reached a consensus. They would simultaneously issue formal notices of default and acceleration, demanding immediate repayment of all outstanding principal and accrued interest. The letters were delivered to Trump Organization offices on January 25th. Legal experts who obtained copies note the language is unusually aggressive. The notices claim material breaches of loan agreements based on fraudulent asset valuations, misrepresentation of financial condition, and failure to maintain adequate collateral value. They give Trump just 14 days to repay the full amounts or face immediate foreclosure proceedings on multiple properties. Drop a comment right now if you saw this coming. I read every single one. Now things get absolutely wild. When those default notices arrived at Trump Organization headquarters, even Trump's most loyal financial advisors couldn't sugarcoat the disaster. A source close to the organization told CNBC that Trump's chief financial officer held an emergency meeting with outside counsel and reportedly said there is no scenario where we can come up with $600 million in cash in 2 weeks. That's when it became clear this isn't just financial pressure. This is an extinction-level event for the Trump business empire. The bombshell moment came when Reuters obtained internal Trump Organization financial statements prepared for the emergency strategy session. The documents reportedly show that Trump's actual liquid assets, the cash and easily sellable holdings that could pay these debts, total just $380 million. But here's the devastating part. Of that $380 million, over $180 million is already pledged as collateral for other loans, tied up in legal bonds for his various court cases, or restricted by court orders preventing him from moving money out of certain accounts. That leaves Trump with roughly $200 million in genuinely accessible cash to pay $620 million in accelerated loan demands, plus the $454 million New York civil fraud judgment, plus approximately $88 million owed to E. Jean Carroll, plus mounting legal fees across multiple cases that sources say are running $15 to $20 million per month. Do the math. Trump needs $1.2 billion in the next few weeks. He has access to maybe $200 million. That's not a cash flow problem, that's insolvency. This move sent shockwaves through the New York financial community. When multiple major banks simultaneously abandon a relationship with a borrower, it signals one thing to other financial institutions: get out now before you're the last one holding the bag. The allegations of a partisan witch hunt collapse when the banks that defended Trump for years and have billions at stake are now racing to cut their losses. This isn't the first time we've seen a real estate empire collapse under the weight of over-leveraged properties and evaporating credit. Think back to 2008 when developers like Harry Macklowe were forced to sell trophy Manhattan properties for pennies on the dollar because banks demanded immediate repayment during the financial crisis. Macklowe lost the General Motors building and multiple other assets. The difference was he didn't have $500 million in court judgments on top of the loan crisis. Then there's the case of Sam Zell's Tribune Company in 2007, which filed for bankruptcy when creditors lost confidence and began calling loans amid evidence the company was worth far less than Zell claimed when he bought it. The pattern is the same: over-leveraged assets, declining values, creditors losing patience, and a cascading collapse. But even those cases didn't involve borrowers under criminal indictment facing multiple trials while already owing hundreds of millions in civil fraud penalties. Subscribe immediately if you haven't yet. This content doesn't exist anywhere else. And let's not forget Trump's own history with bankruptcy. Between 1991 and 2009, Trump-related entities declared bankruptcy 6 times in Atlantic City casinos and other ventures. Each time, Trump managed to negotiate deals that let him walk away while creditors took massive losses. This time it's different. Trump personally guaranteed many of these loans. He can't just let the businesses fail and start over. And bankruptcy judges now have decades of Trump's financial maneuvering to reference. Any attempt to discharge these debts would face intense scrutiny about whether Trump actually lacks the means to pay or is simply hiding assets. So what allegedly makes this situation so dire? According to bankruptcy attorneys and commercial lending experts who reviewed the loan documents, Trump is facing a perfect storm of financial catastrophe. First, the accelerated loans demand immediate cash Trump doesn't have. Second, selling properties to raise that cash is nearly impossible in 14 days, especially when potential buyers know Trump is desperate and will demand steep discounts. Third, even if Trump could somehow sell properties quickly, the banks claim those assets are worth far less than Trump says, meaning the sales might not even cover what he owes. Don't go anywhere. The most explosive part is coming next. And here's what should alarm everyone watching. This isn't just about one businessman losing his fortune. This is about the frontrunner for the Republican presidential nomination, potentially losing the financial empire that's central to his entire political identity. If Trump can't pay these debts and banks start foreclosing on Trump Tower, Mar-a-Lago, and his golf courses, the image he's built over 40 years as a successful billionaire business genius crumbles in real time. Once voters see the Trump organization being dismantled by creditors, there's no spinning that as winning. This puts Trump in a nearly impossible position. On one side, he can try to negotiate with the banks, begging for extensions and offering to restructure the loans. That means admitting he can't pay, which destroys the billionaire mystique he depends on. It also requires the banks to trust Trump's promises, which, given the asset valuation fraud they've discovered, seems highly unlikely. On the other side, he can refuse to pay and dare the banks to foreclose, betting they'll hesitate to seize iconic properties because of the political backlash and complex litigation. But that strategy carries catastrophic risk. If banks call his bluff and actually start foreclosure proceedings, Trump could lose everything within months. And here's the tricky part. There's no good option. Either Trump pays using money he doesn't have, borrows from new lenders who now see him as toxic, sells properties at fire sale prices that won't cover his debts, or faces foreclosure and financial ruin. Legal and financial analysts are calling this a slow-motion financial execution. A Wharton Business School professor who specializes in distressed debt told CNBC that when a borrower faces this much debt with this little liquidity and this few options, the outcome is almost always the same: forced asset sales, foreclosures, and potential bankruptcy. The only question is how long the borrower can delay the inevitable. A former federal bankruptcy judge added that Trump's situation is uniquely complicated because of the criminal indictments and civil judgments. Courts have frozen some assets to ensure Trump can pay penalties if convicted or when judgments are enforced. That means even assets Trump technically owns might not be accessible to pay these bank loans, which makes negotiating with lenders nearly impossible when you can't guarantee access to collateral. Do me a favor and slam that like button because it genuinely helps this video reach more people. Even a financial advisor who previously worked with Trump acknowledged that the situation looks grim. He emphasized that when multiple sophisticated lenders simultaneously lose confidence, it usually means they've discovered something that makes them believe they'll never be repaid in full. And once that perception spreads through the financial community, no one else will step in to provide rescue financing because they assume the previous lenders know something they don't. So let's break down what this could mean. First, the immediate impact is financial collapse. If Trump can't pay the $620 million in bank loans by the February 8th deadline specified in the default notices, banks will begin foreclosure proceedings on Trump Tower, 40 Wall Street, the Doral Golf Resort, and multiple other properties. Legal experts say foreclosure on commercial properties typically takes 6 to 18 months in New York, but banks can freeze assets, shut down operations, and appoint receivers almost immediately. Trump could lose control of his signature properties within weeks, even if the legal process takes months. Second, it creates a devastating political problem. Trump's entire identity is built on being a successful businessman. His 2016 campaign message was, "I'm so rich I can't be bought, and I'll run America like my businesses." If voters watch Trump lose his business empire to foreclosure while scrambling to avoid bankruptcy, that message is obliterated. Polls conducted after news of the bank letters broke show Trump's favorability among independent voters dropped 11 points in just 3 days, a staggering shift that campaign strategists say could be catastrophic in swing states if it holds. Finally, looking ahead, the broader implications are profound. If Trump is forced to sell properties to pay debts and judgments, every sale will be scrutinized for whether he's getting fair value or desperately unloading assets below market price. Every buyer will be investigated for potential conflicts or illegal financial assistance. Every dollar Trump raises will be tracked to ensure it goes to creditors and courts rather than being hidden. This level of financial surveillance makes it nearly impossible for Trump to operate businesses normally or maintain the lifestyle he's accustomed to. Drop a comment below with your thoughts. I'm genuinely curious to see your perspective. But beyond the immediate financial catastrophe, this is really about political survival. Trump has told supporters for years that he's a billionaire winner who always comes out on top. If that image is replaced by Trump, the desperate debtor being chased by banks and courts, his entire political appeal is undermined. Voters might tolerate legal troubles if they think Trump is strong and successful. But watching him lose his fortune while pleading for more time to pay debts he claimed he could easily cover destroys the strongman narrative that his base loves. This scenario is causing sheer panic within Trump's inner circle. Reports indicate that top advisors held emergency meetings at Mar-a-Lago on January 26 to discuss options. Some argued for filing for bankruptcy protection immediately to stop the foreclosures and buy time. Others insisted that bankruptcy would be political suicide and Trump should instead try to negotiate with lenders privately. Still others suggested Trump should sell smaller properties quickly to raise enough cash to pay the most urgent debts and fight the rest in court. The campaign is fracturing in real time, torn between financial survival and political viability. Meanwhile, Trump's core supporters are absolutely furious at the banks. Social media is flooded with calls to boycott Deutsche Bank and the other lenders. They're being labeled deep state operatives working with Democrats to destroy Trump. To the base, this is the ultimate proof that the entire system is rigged against their candidate. But here's the problem. These banks aren't liberal institutions with political agendas. They're businesses that want their money back and have concluded Trump can't pay. Things escalated further when Trump himself responded with a series of posts on Truth Social on January 27th. He called the bank actions a coordinated hit job orchestrated by Biden and Democrats who weaponized financial regulators to target him. He claimed his properties are worth far more than the banks say, and that he has more than enough to pay every penny he owes. He specifically attacked Deutsche Bank's CEO and called the default notices fake news designed to hurt his campaign. Stay with me. What comes next will completely change how you view the situation. Here's what makes it even more extraordinary. Trump's own response contradicts basic financial reality. If he has more than enough to pay these debts, he could simply write checks tomorrow and make this entire crisis disappear. Instead, his lawyers are filing emergency motions asking courts to stop the banks from foreclosing, arguing Trump needs more time. If you actually have the money, you don't need courts to give you more time. You pay. When your defense is attacking those demanding payment rather than simply paying what you owe, you've already admitted you can't. Legal experts immediately flagged the contradiction, claiming you're a billionaire with unlimited resources while simultaneously filing legal motions to delay paying debts creates an impossible credibility problem. If the claims of vast wealth are true, the pleas for more time are unnecessary. If the pleas for more time are genuine, the claims of vast wealth are false. Courts will force Trump to choose which story is true, likely by demanding he disclose detailed financial statements under oath showing exactly what he owns and what he can access. This goes far beyond a single financial crisis. It's about whether Trump can maintain the persona that his entire political movement is built on. If there are no credible options to pay these debts, banks will seize properties and the world will watch the Trump empire sold off piece by piece to satisfy creditors. It's not just about losing money. It's about losing the identity that made Trump a political force. If this blows your mind, hit that like button right now. Here's the situation. A group of major banks has demanded Trump pay $620 million in 14 days after discovering his properties are worth far less than he claimed. Trump reportedly has access to maybe $200 million in liquid assets while owing over $1.2 billion in debts and judgments. This is no longer about politics or legal strategy. It's about math. And the math says Trump is insolvent. When Deutsche Bank, an institution that stood by Trump through decades of controversy, suddenly demands immediate repayment, we've entered genuinely unprecedented territory. If there are no consequences for massively inflating asset values to secure loans, it signals that borrowers can lie to banks and face no real accountability. But if courts and banks enforce these debts aggressively, Trump could lose everything he's spent 40 years building. Keep a close eye on this story. More creditors are reportedly reviewing their Trump exposure, weighing whether to join the wave of institutions demanding payment. Trump's legal teams are preparing for simultaneous battles in multiple courts trying to delay foreclosures. And voters across the country are watching closely to see whether the billionaire businessman they voted for is actually broke. Before we go any further, smash that subscribe button so you never miss content like this. Here's where things stand right now. Trump has until February 8th to come up with over $600 million or watch banks begin seizing the properties his entire identity is built on. Financial experts say there's no realistic way to raise that much cash in time. Legal experts say bankruptcy might be his only option. Political experts say bankruptcy would destroy his presidential campaign. The walls are closing in from every direction. This isn't just another lawsuit that gets settled quietly or another scandal that fades from the news cycle. This is a financial reckoning that will determine whether Trump stays a billionaire or becomes a cautionary tale about what happens when your debts finally catch up with you. The countdown is ticking. The banks are positioned to strike, and Trump has no moves left that don't end in disaster. The evidence is in the court filings. The default notices have been delivered. Now we wait to see if Trump can pull off the most impossible financial escape of his career, or if this is finally the end of the Trump empire. The stakes have never been higher, the deadline has never been closer, and the financial cliff has never been more real. Pause for a second and hit that like button if you're finding value in this coverage.